Well, good day. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this is for Wednesday, the 19th of March, Fed Day 2025. Now, we started off this morning with the Bank of Japan doing nothing with their interest rates, and then it was matched by the United States, the Federal Reserve, if you will, doing the same thing. When we look at tomorrow, here's the data we're going to get. You're going to get the Philly Fed Regional Business Activity Index. That comes out at 7:30. Existing home sales data for February. That'll come out by the National Association of Realtors, and that's at 9. We'll get the gas storage numbers in the morning. And then here's the highlights. Now, you might want to at some point pause this. That way you can read what they are. But in essence, what the Fed has said is simple. They're looking for slower U.S. growth and higher inflation. And therefore, you're going to have the Fed put right in back of you. Or in other words, they're going to be protecting you against the downside in the market. So when you looked at the dot plots, you saw that the consensus now is 2 rate cuts starting as early as June. There's an outlier of possibly a 3 because if you go to the CME Group's website, you'll find that it's there, and it's called Fed Tracker, and that's what you might want to do. All right. So as I looked at all this and looking at what it was, you got the market to come for a bounce because, again, you're getting the Fed saying, I'm here. Don't worry about it. We're going to be protecting you in different ways. And you saw the stock market rally on it. You saw XLC and other markets take off to the upside. Even Amazon, which has been plunging, came down. And you were up sharply in Netflix one more time again. As we step over, we're going to be covering XOM today, STNG. I'm adding a series of new markets as per I requested. Tell me what you'd like me to cover, and we'll do some quick rotations on these from time to time. So you can write me each day, tell me what you want. I may not get to yours today, but I'll try my best to get them in there, and we'll see what we can do with them. The metal markets are continuing to rally in the gold. The silver market was the weak spot today. AMC, remember I told you this stock was going down. You're now back to the $3 level. This is a rally. So remember what I said. I know that game. I don't understand how anybody's playing it. I want you to look at a market that's exploding. Boeing. I told you it's one of my picks of the year. And the reason is I believe they're going to be allowed to produce more planes. I think that the backlog is phenomenal for them. They're going to see price increases, but that's just how it works. It's not as though you can go somewhere and get another plane. And because of the cost of fuel and how the airlines compete with each other, I think their book's going to do fine. The CFO came out and said their cash flow situation has improved neatly. They see brighter days ahead now, and they're able to produce more planes on a gradual basis under the government's auspices as they're looking at them. Those are all good things. In looking at the energy market, I think I said this yesterday. If you look at the high and the low, you've made about a 50% retracement. That's really all I can say about it. The pattern is one where you've had a neat extended bounce, but the pattern is one of a lower low and a higher high. That is not a trend. A trend would have higher lows and higher highs. So it's a bounce in the market that, as I also said, yesterday had cleared the 18-day average. It found resistance first at the 100. The question was today, would it find further resistance there or break back under? Well, it didn't do that. It was able to clear again the 100. So now if it can keep going, why not the Bollinger Band, which will fall a bit tomorrow. And if prices go up, the two will meet. And that is where the problem should happen, just the way it did back here. I don't think you're going to get this pattern where it takes off running. I could be wrong, but I'm not seeing that. I'm saying that because you're overbought already and you've exerted a lot of power to get up where you're at. Now, I was looking for Dutch Brothers to make a run to the 18-day average. This market lost its bearish embedded reading, and I thought it would give you a pop. You're very close. You got up today to 67.16. Not quite the 18-day average, but you're closing in on it. On CrowdStrike, you still have higher lows and higher highs. Now, I'm probably going to drop CrowdStrike for a while soon and give you another chart here that we can look at, but I liked it a lot. Right now, it is saying big support, 362.79, 364.05, as long as you don't break through this low that we had the other day. Let me see if I can get it to come back. There we go. I'll get you to that low, and here it is, which is 356.71. Do you see that? As long as you don't get under that low, I don't see why the market can't continue to march higher. I don't want to see it get overbought, but on pullbacks, that's what I'm expecting to see some action. Now, here is STNG, which is Scorpio Tankers. This happens to be what the business is that they're in. And you're looking at companies that are dealing with petroleum primarily, not container, but more or less the petroleum movement. And that's going to be very important now. Different things can happen in the Middle East. We know that there's nothing been settled there. Don't know how that's going to affect everything. But I know the president had today the big oil companies go to the White House. And now, are they going to drill, baby, drill? They haven't been. So we will see if he's going to be able to convince them in any way to do it. When I looked at this chart, and I've never looked at it before, it's the first time I've looked at this company, you see a prolonged break. And now the market's going sideways. Market's acting like a bottom is forming. So I'm looking at this, and this is, to me, one of the more exciting ones. The person that gave me a few of these. The others didn't look as tempting as this one. I look at the market caught between the Bollinger Band. I'm not looking for it to break out as it's overbought. It could, and it could run. And if it did, you'd look at 49. And that seems to be a big number that I'd be looking for ultimately back in this chart. It's at 41 now. I'd rather see it pull back and play in here a little bit and wind up like a spring in those Bollinger Bands and then give you the pop. I'm just making it up, obviously, hoping that's what happens. Another one we should cover is Alibaba, because they're back in the grace of China. And ever since that happened, you see, this is this year. This stock has just exploded. Now, I certainly don't think this is the spot to come in to it. So I wanted to bring this up and just say the opposite of what I'm saying in Sting. I'm hoping Sting could eventually get a move like that, but this looks to me like it's a little rich in the chart. It's got up to the Bollinger Band. We'll see if it has more problems. It is overbought. This was the Gorilla Glue trade, and it happened as the market locked in the bullish embedded reading. This is a classic what I teach in my enhanced Bollinger Band course at IRAPstein.com, and the market just ran to the upside beautifully. Next, I'm going to start covering Robinhood a little bit more. I like the brokerage companies in this type of environment, and the reason I do is volatility makes them pick up with their trade, pick up with their revenues, so on and so forth. This has been a bear market rally. Bear market because this market has been able to stay under the 18-day average of closes ever since mid-February. Now the market is getting its first test again. It did it once here from the Bollinger Band up here. It's doing it one more time. The difference, and it doesn't mean it's going to be bullish here, is the market is retesting the 100-day average. It stayed under it for nearly a week or so, and now it's bouncing. It is certainly not on my radar scope to rush out and say buy, but it was a lockup as far as I was concerned when you lost the bearish embedded reading to give you this type of rally. Next, XOM. And if you're an energy player, this is probably the best one to play with, ExxonMobil. I mean, it would be, in my portfolio, would be one of them that you'd want to hold if I were you. Higher lows, higher highs, into a big resistance point that it hasn't seen in a very long time. If it can get up and stay over that for a week or so, it could get very interesting here. The market, I think, is now saying it has made a bottom of importance right here in the 102 area. And now the question is it getting a little ahead of itself? Probably, as it's running the upper Bollinger Band. Then we look at XLF. This is the financial services. And again, as I said, I expected yesterday that if we could pop up off the news today, we'd get into the resistance of the 18-day average, which is, 18-day is 49.63, and the 100, the green, of 49.65. A close over that you can stay over it a few days starts me getting interested in the market. But right here, this is a bear market rally that has gone to the objective on the bounce, and that's about all that it is. In XLI, the industrial sector. Now, this is what I mean when I say I want to see if a market can get over and start holding. Let me come back here a little bit more. Again, a bear market rally. Why? Because you've been under the 18-day average of closes. As it comes up, the resistance is the combination now of the 200-day average and the 18. So what we had today is a market that got over both numbers. Is it going to be able to stay there? If it does, you have a trend now that's got higher lows, higher highs. The pros will nibble, in my opinion, at 132.93, and they'll bail under yesterday's low, saying, nah, that was an attempt at the market, but it's really not ready to go anywhere. If it keeps going, temporarily, you have the 100-day average and the Bollinger Band right together. So let's call it the 136.5, 137 levels, the resistance zone. In the energy, you can see how you pick back up. And that's good news. Why? Well, the president called everybody in. So are we going to drill, baby, drill? I want to see the response to all that. GLD, guess what the Fed said? Inflation. The Fed is saying that tariffs are inflationary. It added to the gold story all the way through. This is one of the powerful signals that we have. It is called, and I'm going to repeat, this is the Gorilla Glue trade. It's when you hit the Bollinger Band and you lock on it. You're not going over it spiking. You're not pulling under it. When that happens and you crawl, you often try to force the embedded reading to take place, where the blue and the red lines get over 80 together. Take a look. Both today over the 80 level, over the 80 level yesterday, over the 80 level the day before, not the day before. You're there. So now on breaks in the market, I even look for more aggressive buying until the red line closes under 79. Do we understand that? In the silver market, it's trying the same identical thing. Pattern up, bias up, resistance up here. The only reason I didn't like this one as much was where the weekly charts were coming in. A little different there. Copper, as you hear me say, copper is looking at a tariff play. It's looking at the need for the copper everywhere else and shortages worldwide. I went through that, and now you have the Gorilla Glue trade where you're trying to embed that. These are all bullish markets in the metals. Yes, corrections can happen, and as long as the embedded readings hold on, I think you buy, and if you get a reading under 79, bye-bye. That part of the game's over. Now the bonds looked and said, the Fed's back. I got Fed puts. I'm covered. What do I do here? Well, the market taking off to the upside. We went down to 425 in the 10-year note by the end of the day. So you can see the market saying, uh-oh, I want some protection. The Fed is saying slower U.S. growth, higher inflation, bingo, problems. All right, sideways action in the dollar, up a fraction today. But you see, this is what I'm talking about. Remember I said in the metals, you're looking to buy. In the dollar index, this is a short sale until the red line closes back over 21. And in the FXE, it's probably a buy here now as the market until you close under 79. That's what the theory is on momentum. I'm Ira Epstein. I was going to do a special report. I got too busy today, in all fairness. I mean, I was swamped all day long. I'm going to try to have one done by Friday for you at the latest. That way I can put it together tomorrow and get a video special report out for you. Have yourself a great evening. I'll catch up with you tomorrow. And remember, you can always go to IraEpstein.com for our free offers or sign up for the real research where I say, I want you to buy at XYZ price, a stop here, so on and so forth. You take care.